Hi viewers, how are you all? I hope you all in good health. So, did you all wonder about the title of my video? I said you can earn big money in the chart. So, how is that you can earn big money from the charts? Did you think about it? Actually, this the answer for this is actually very simple. To earn big money, first you have to manage your risk. So make sure your risk is very small, but then your return is it's higher, or at least one time or two times higher than that from the risk that you're taking. Number two, so after you have managed your risk, that means the moment you try to enter the market, you have already identified a position where the risk is very minimal, but the potential for upside is much more higher. So you have win half of the race. The other half of the race is you got to identify from the chart if the chart has a very high potential to go break the previous high. So if you can identify a chart that gives you a promising ability to break the previous high, then you won the full game. Okay, you will win the full game, but of course we will still we'll say 99% of the game. There's 1%, of course there's 1% of failure, sometimes it occurs. Okay, so we'll put it at 99%. So I mean probabilistically, so we'll put it in that manner. Okay, now so that is in the previous video. So if you look at the previous video, we were talking about the uptrend. So in a lot of markets, in some of the markets, I would say they do not support shorting, or they only allow limited shorting and all that. So the only way for you to earn big money is in the uptrend market. So if you have missed this uptrend, how to identify power moves from the chart for the uptrend, so you will have to watch my previous video, and then you will actually get it. Okay, you'll get how to identify powerful moves from the chart. In this video I'm gonna talk about how to identify powerful moves downward. Now those of you who perform shorting in the market, you will really appreciate this video, because you know that we earn a lot of money by shorting the market and when it is in a heavy downturn, or rather heavy downtrending. Okay, heavy downtrending. Okay, so that's what we're gonna learn in this video. But even if your market does not support shorting, this video is still useful for you, because at least you know if it is a downtrend, how you will know how to cut your loss. Okay, rather than losing a lot of money, you will lose partial of it. So that is still beneficial than losing everything. So do watch this video whether your market supports shorting or not. So it will still be beneficial, because you would sometimes, even though the probability is very high, there's even that 1% chance where things go upside down. So that is the biggest risk, I would say. No, so you will have to pray hard. I would say that it goes by the probability. Okay, so now let's look at downtrend. So I'll get my pen ready. Before we begin, can you help me to subscribe my channel, like and share this video? We want this interesting topic to be shared and to be listened by as many people as possible, and so that they all can benefit and then do not suffer losses, and they will live a beautiful life. So we're gonna go for downtrend. Okay, we're gonna go for downtrend. Okay, this is an trend. So in this downtrend, we have two scenarios. So we'll look at the first scenario. So the first scenario is where your market is going downward sharply, then making a huge retracement, then going down again, then making a retracement, and then it makes next move. Okay, so let's say this is the market. Okay, this is the market we want to study. So first we need to check whether this market is in a downtrend. So how do we verify or confirm that this particular market is in downtrend? Okay, the idea is by plotting your high. So this is your high, right? Then that's your low. This is the lower high, and that's your lower low. So the moment you manage to identify a higher high and the lower lower, so this higher high is not higher, sorry, this lower high is not higher than the previous high. It must be lower than previous high, and this lower low also must be lower than previous low. So the moment you can identify that, okay, the moment you can identify that, then you can confirm that this market is in a downtrend. So once we have identified downtrend, next thing we have to, now what we are trying to look for is whether this particular downtrend is actually powerful enough to keep moving down. Okay, keep doing now. So that's what we want to study, or rather understand. Okay, so after you've identified the downtrend, confirm on that. Second step you need to do is you need to identify the loop. Okay, so we need minimum 2 loops in order to make a study about the power that is inherent in the particular chart. Okay, now let's look into the 2 loops. So the loops is actually I will draw like this one, and from there to here. Okay, how do we identify the loop? Is very simple. In a downtrend, you have to start with a high. So the moment you have high, a low, and the next high, that's gonna create one loop. Okay, that's loop number 1. And then loop number 2 is created by looking at the high, then the low, and the next high. This is supposed to be a lower high. Okay, so then that's your loop number 2. As I advised in the previous video, the rule is still very the same. It's advisable for your loop 1 and loop 2 to be at least 20 days long. Okay, 20 days. So that means we need a 20 days trading days in order for us to make analysis, more accurate analysis, I would say. So at least 20 days. Okay, you need at least 20 days for both the loops. Okay, minimum. Okay, if it is less, and then the analysis will be less accurate. So that's the worry. Okay, once you have done the second step, identify the loops, then we want to identify the demand and the supply. Okay, so when the price is going up, that means the demand is increasing. When the demand is increasing, only then the price moves up, right? But when the price moves down, that means there is more supply. So only when there is more supply of certain things, for example, if you go to fish market, you see a lot of fish supplies are there, then definitely the sellers, fishmongers, will start to sell fish at a cheaper price, right? So the same thing here. So now what we see here, the price is going down here, right? So this part, the price is going down. That means there is more supply. Okay, there's more supply. This is more supply this side. Okay. Then the other one is then there's the price moving up. Price goes up only when there is a demand, right? So that shows us there's a demand. Okay, there's a demand. Okay. The next thing we can say is, okay, now we have take a different color. Okay, then we have maybe I use the green itself. This portion again, the price is going down. That's due to supply that is existing in the market. And then we also have price going up here, right, which is demand. Okay, so in one of the videos in my playlist, okay, there's a video on strength of the market, identifying the strength in the market. I explain how, or rather the techniques, how to identify if this particular chart has a strength to go down. Is it in a strong strength to go down, or is it in a weak strength to go down? So I have that video, so you can watch that video as well. Now maybe I can just summarize for you. So if, say example, this particular height, so this downward height here is actually X, and then this particular downward height is Y. So if you notice that the Y is greater than the X, then according to the video that I published much earlier, we can conclude that this is going to be strong downtrend. Okay, it will be in a strong downtrend. So that is if the drop, or the second time drop, if the second time drop, let me take a proper pen. So if this second time drop, the supply side is much more bigger compared to this drop, okay, the drop in terms of the quantum of it, then you can say that there's a high chance it is in a strong downtrend. Therefore there's a very high likelihood that this particular chart, or rather that this particular shape, is going to go down. But that is only one hint that is going to go down. The next thing we need to know is whether it's going to go down even lower than previous low. So where is the previous low? The previous low is here. The previous low is here. Now the market is slightly going up here. It's going up here. Now we know by studying this portion of the chart that it is in a strong downtrend. And let's say you are right now here, and then you're thinking whether should I be shorting the market or not shorting the market. We already concluded that it is in a strong downtrend, and in a strong downtrend we're supposed to be happy that the market most likely is going to go down. So therefore you can take your short position. In fact, you can put a lot more, you can do a heavy shorting because it's in a strong downtrend. But the question now is, the next thing you need to answer is, yes, it's going to go down, but will it be able to go even below the low, the previous low? Will it be able, does it have the power to go even lower than the previous low? That's the question that we want to answer. So if you can answer both the question, does the chart got the strength, which I explained in one of the video in the playlist under the heading strength in the market. Okay, now the second thing I'm explaining in this video is the power of it. So if you have the power to go down, then you're quite happy. So there's a very, very high probability that you will actually achieve your aim, that is to do a shorting that is successful. Okay, now let's see. Okay, I'm going to reverse I want to erase the charts, some part of the charts, so that I can clean my display. It doesn't become very cluttered. Okay, now this is the chart. So now we want to study we said that this part is the supply, and then this part is the demand side, and then this part is the supply again. I'm just summarizing again. Then this part is actually the demand again, right? Now we want to see whether it has the power. It has the power to go even. It has the power to go even below this particular low. Okay, this particular low. Okay. So how do we decide? We look at the retracement. Okay, so we study the retracement. So the retracement is such that when this guy go down, okay, let me take a better color. Okay, when it goes down here, then it moves up. How much did it move? So you see, this is the movement down. Then it retraces almost 75%. That means it's able to go up 75% of the down of the previous loop, right? So in this loop number 1, when it was going down, so when we saw that it's going down here, this is the going down, and then we went up here a bit, and then we noticed that it managed to go up to about 70% of to the previous level, right? It managed to climb up to 75%. That's a quite strong climb, right? Okay, that is for loop number 1. Now we look at the loop number 2 as well. So in loop number 2, it was going down that much, right? But then when it comes to climbing back, this is how much it can climb. So if you take this particular, maybe you take this particular, it only managed to climb up to recover back 25%. Okay, because if you take the two differences of these two values, of this value and this value, then you'll see that it's only able to recover back the losses about 25% of it, right? Previously it was in the loop number 1, it was able to recover back up to 75%, I mean retrace up to 75%, but this time it only managed to recover back up to 25%. What does it tell you? It tells you that it doesn't have the ability to climb up, so therefore there is a very high chance of it's very powerful to go down. Okay, because it doesn't have the power to go up, therefore it has the power to go down. So therefore I will conclude that this one has power to go down, and it has power to go down and break this particular previous low. Okay, so I will say go down and break previous low. Okay, it has power to go down and break previous low. Okay, so that is basically what we can learn. Okay, so if the retracement is not getting stronger, is getting weaker, that means it doesn't have any power to move up, therefore it has a very strong power to go down. Okay, so now I'm gonna talk about the second scenario. Before we move to the next scenario, let's take a moment to subscribe, like and share this video. Please do it now. Okay, this is going to be second scenario. In the first scenario we saw that the retracement was getting weaker, right? But this time we're going to see a chart where the retracement is getting stronger. So let's draw it. So let's say we have a chart going down, then it retraces a bit, and then it went down so much. Okay, maybe I try to to make it interesting, I will just, it didn't go that much down, then it climbed up so much like this. Okay, maybe I adjust a bit, not to make too bad. Okay, so it goes up just to facilitate the learning process. Okay, let's say we have chart like this. So is this a downtrend? Okay, because we are only talking about uptrend, and then just now we're talking downtrend. Okay, in the previous video I talked about the uptrend, so in this video we're talking only about downtrend. Then I will have another video to talk about the sideways charts. Okay, so before that we will try to, okay, this is your high, this is your low, this is the lower high, this is your lower low. Okay, it has the property of a downtrend. So when you have a lower high and lower low, then it means it is a downtrend. So we can confirm on that. Okay, so now next thing we need is we need two loops. Okay, so do we have the two loops? Okay, so this up to here is the high, the low, the high will give you the first loop. Maybe I'm going to redraw a bit. Give me a minute. Okay, now there's another one here from here to here. So that's your high, it's your high, that's a low, this is another lower high, right? So you have loop number one, you have loop number two. Okay, so we fulfill that, the two loops. Then of course we said that it has to be like 20 days, so let's assume that it is 20 days. Okay, my writing is a bit bad. Okay, and then this loop number two also 20 days. Okay, let's assume that. Okay, now once we have this kind of property in our chart, then of course we need to understand what the chart is trying to convey. Okay, now this is the supply, because this part is actually the supply, right? Price go down means is due to the supply we have, and then we have price going up, that's due to demand. Then price go down again, that's due to supply. Then price go up again, this time it's got a huge climb up, that's demand. Okay, so okay, now that's the understanding that we must have from the chart. Now let's try to revise back from the last week video I posted, which is actually on the strength of the market. So let's try to see whether this particular chart has got a downward trend. Is it a strong trend downward or a weak trend downward? So if you can recall back what I said, so you have a distance from here to here, and this distance is quite big, so let's call it X. And then the distance from there to here, let's call it Y. So if you don't understand this, do watch my other video, which is on the strength of the market. I did explain very detail on that. So we notice that in this case X is greater than Y. Okay, that means your downward moves in your X downward move was actually a very strong downward move, followed by a weaker kind of downward move. So this basically shows us that the strength is actually weakening. So this is a weakening downtrend. So we will conclude that this is a weak downtrend. Okay, this is a weak downtrend, huh? Okay, this is a weak downtrend. Now, weak downtrend means what? So the potential or the probability of going further down is actually much lesser. That's what it means. Now, the other thing we want to figure out, is there any possibility? We know it's a big trend, but is there any possibility of it going any lower than the previous low? This is the low that we have here. This is the previous low here. Is there any chance for the chart to go any lower, or rather the next move to go? So right up to here we are analyzing from here. Oops, let me try to redraw again. This is the side we are analyzing. Maybe my chart is let me try to clear up many things in my chart. Is too many things probably, you know. Okay, so now okay, maybe I should enable I want to see the loops, so I'll put the loops there. Okay, so if you look now, Okay, we have analyzed up to here. Okay, so we have analyzed this portion, right? This portion of the chart. What we don't know is this, the next move is probably going down. Now we want to see if the next move there is a possibility, is there a possibility of we moving any lower. This red line is the previous low, no? Is there any possibility for this dotted line to move any lower than that? Is there any possibility? So that's what we want to find out. Okay, is there, so just now we said that it's actually a weak downtrend, which means there is a less chance of going further down. But then, is there any chance of it going any lower than the previous low? So that's the thing we want to study. So to study that, the way is to understand the retracement. This is the two retracement we have here in the two loops. The first loop is the first loop and the second loop. In the first loop and the second loop. Okay, we saw this loop is actually retracing. So this is the height of the down move. So we saw that it is retracing up to like 25%. It's probably that because the price has gone down so much, then it went up a bit, right? So it went down. So maybe I will illustrate. So it goes down all the way this much, and after that it moves up a bit this much. So we are thinking that it has actually recovered 25% of its losses, right? Now in the next loop we are seeing that the price moves that much low, but then the good thing is when it goes up quite extensively. Now it is able to cover up like maybe a bit more than 50%. Right? It is able to cover up a bit more than 50%. So you can see that there is a strong demand coming in, because previously the demand was up to only 25%. Now you can see the demand is actually slightly more than 50%. So the probability of it, or rather the power for it to go even lower than the previous low is very, very small. So the probability is very small. So there's very less likelihood that it's gonna break the previous low. Okay, maybe what we can potentially anticipate is for it to go down and then probably start to move up, maybe. Okay, so that's what we can say. So we say that this particular chart, because the retracement of the second loop is actually stronger than the first loop, then we can conclude that it actually has no power. Okay, big downtrend and no power. Okay, so that actually gives us very strong indication to not do. So if you are right now here, so let's say you are right now here and you're deciding whether I should be shorting any further, the answer is strictly no. Do not take the risk, because you always, when you're investing, you need to do a calculated risk, right? You do not take any position, shorting position at this point of time, because the chart says that it is weak, it has no power of going any further down, breaking lower than previous low. So you will not make money. So because when you do shorting, at the moment you short, but then the price go up, then it's going to be a loss for you, and in fact can become very what you call very painful loss. Okay, so that is what this particular chart is telling when if you are shorting. But in case you have been sustaining your losses up to this green point, which I highlighted, this one, and at this junction you are actually deciding, oh, I'm having a heavy headache, should I sell it or not, no. So in fact you should hold on your horse, do not sell it yet, because trend has gone down weak and then there's no power of going even lower. So there's a high chance for it to, do a reversal and all those things, where probably you can recover a bit more better your money and all that. So this is what we call risk management. Take a calculated risk, when to enter, when to exit. If you are shorting, do not enter at this point. And if you are trying to, if you do not do shorting, you're trying to exit the market now, you probably need to have a second thinking. Maybe this is not the right time. Probably you should wait when it retraces, because things are getting very weak. So maybe you will have the good news very, very soon. So these are things that will help you to earn that big money. Okay, so if you understand the scenario number one is scenario number two, in the scenario number one, it really tells you how to really earn big money with the shorting. In scenario number two, it tells you, okay, uh, do not do shorting, stop your shorting if you have any intention, so that you will not lose your money. Not losing your money also in a way help you to earn big money, right? So with that, I would like to conclude. So I just want to remind you, please like, share, and subscribe to my channel. So I will have more videos coming up, and definitely you will learn something. And in fact, these are all theory videos I am putting up. In the next video, probably I'll try to talk a bit more practically. I'll pull out some real charts and try to analyze real charts of any stock market, and see whether it really works in the real market. And do take note that this is not only applicable for share market. This same concept can be applied in gold market, can be applied in currency market, can be applied in cryptocurrency, even commodities. Now, as long as it's a market where it deals with psychology and all that, this is really a psychology stuff. So you can even apply them in those markets. Okay. So with that, I will conclude my session this time. See you at some other time. Thank you. Bye bye.